Should we start, Omkar?
Ma'am, we are live.
Thank you all for joining, and a warm welcome. Good afternoon to all, and thank you for taking out time, on a trading day and attending this webinar. Trust me, you're going to be really happy and satisfied that you've attended this webinar. It's more because we have Mr. Devarsh Vakil, who's been with us for in this organization right from the inception, and he's going to give his insights about margin trade funding, which is the happening thing now at this particular point of time, where traders can do in 4x of the value that they have and buy stocks. And with the election results out, we thought this is the best time to have the webinar. Now, just some few things about Devarsh Vakil. He's currently with HDFC Securities as the Deputy Head of Retail Research, and he's got about 20 years of experience in the field of financial market research. His role entitles generating investment ideas and anticipating trading opportunities. Devarsh also closely tracks global markets and important international data points that impact Indian market. Devarsh is an electronics and communication engineer from Gujarat University and a postgraduate of IIT Kharagpur in Ahmedabad in business management. He has also attended the senior leadership program of the prestigious Indian Institute of Management, Ahmedabad. His market accounts and opinion is sought after by various media houses. He has been appearing in various business news channels like CNBC, TV18, Awaaz, Bazaar, Zee Business, ET Swadesh, etc. for the last 18 years. He's quite a well-known face over, on the TV. He is widely quoted in various business newspapers and magazines and has authored in various business newspapers and magazines, and has also authored articles on varied subjects. So Devarsh, welcome to this webinar. We hope, hearing from you about the markets, and especially after the election results. So please, over to you, Devarsh.
Right. Thank you, Sharmila. This particular webinar is mainly on concentrated on basics of trading and basics of MTF. So I'll straight away jump into the content. So you've already spoken about me, introduced myself. So I'll go ahead. So basically, this webinar is more towards teaching how to trade, and it is not supposed to be easy. Anyone who finds it easy is not doing it right. So let's first understand about the risk and return matrix, and this is most important from a point of view of learning about it. So as we increase the expectation of returns from fixed income instruments like fixed deposit or indirect instruments like mutual fund, when you try to generate more return, you assume more risk also. So where does the positional trading come? It comes between the delivery based direct investment. It is far more lucrative than the long-term investment, but it also entails a lot of risk. And something you graduate from fixed income instruments, you started generating savings, you go into mutual funds. From in mutual funds, once you have enough experience, you start directly investing on your own. And as you have sufficient experience and risk capital, you should graduate towards positional trading, and that's where this webinar is focused. So trading or investment is like this fable of Panchatantra, where a group of blind men and an elephant are there. You look at market from a single perspective, then you will find that it is only for derivatives or only for positional traders or for a investment. But actually, if you step back and look at a bigger picture, there is opportunity for everybody. You should stick to what you know, or depending upon your allocation and asset allocation, allocate capital depending upon the approach. So this is the agenda. Today we are talking about MTF, which is also known as BSPL or BNPL, where you can buy stocks and pay later. So in HDFC Securities, we offer these services at an interest about 0.05% per day. So if you have a stock which is there for a longer term, you can hold that stock, put it into collateral and generate margin, and then put certain amount of money for the mark to market profit and loss. So based on your long term portfolio, you can generate an alpha based on our research. That is the whole proposition of MTF. Here, for example, you have 1 lakh rupees cash, another 3 lakh rupees funds are provided by HDFC Securities. So your buying power becomes 4 lakh. Obviously, all of you know the basic maths. If you are right, if you have opportunity to profit from some trade, instead of 1 lakh, if you put in 4 lakh, obviously your profits will be 4 times. So how does this work? So what drives these stock prices and how do we identify this opportunity? I wanted to tell you. So obviously the stock market is impacted by the global economy and liquidity. What are the interest rates? What are the GDP growths of global economy? IMF and other multilateral agencies put out those projections. Below that comes the Indian economy, the growth prospects about India, various uh, demographics and corporate earnings opportunities are there to profit from investing in the longer term about the Indian economy, and what is the situation of liquidity, whether liquidity is rising or falling, what kind of interest rates are there, whether interest rates are rising or falling, that impacts the markets from an Indian economic perspective. Then it comes to the sector dynamics and the company fundamentals. Within the Indian economy, there are about 60 to 70 different sectors which are listed on Indian bourses. Some sectors where the government policies are in favor, where investors are putting in new money, the earnings are rising, they are likely to be in the bull market. Others are going through the corrections. And this we try to identify using demand and supply. So the advantage of momentum trading through MTF is that we can be profitable in relatively short amount of time if you execute it correctly and consistently. So consistency and correctness is the keywords in order to make money in the markets. Short-term trading opportunities are plenty in the market. There is huge volatility. We saw in last couple of days. If you are a successful trader, you can try to identify such opportunities and make this money. Many investors feel that they can just buy into some companies and remain invested for a longer term and you will make a lot of money. But a good company is not necessarily a good stock. I'm giving you some examples, like from November 2010 to February 2021, State Bank of India did not give any return for the 10 consecutive years. What it was in 2010, same prices was there in 2021. During the same time, Kotak Bank went up 6.5 times. Similarly, from February 2000 to September 2010, HUL did not give any return. Another FMCG company like Marico went up 37 times during that period. So if you identify a sector and then identify a stock, these kind of various possibilities are there, where at one point of time you may not make any return. On the other side, another company can give you humongous return. And there are scores of examples like this. Wipro, Tata Elxsi, Reliance, Eicher Motors. So for 8 years continuously, from June 2009 to March 2017, Reliance Industries did not give any return. At the same time, another large cap company went up 86 times. And these are the examples on the upside. There are examples on the downside also. A well-known company of Suzlon once went from 400 to 2. Arcom went from 845 to 50 paisa. So it is important to not only know what to trade, it is also important to know when to trade. Just by identifying a good company, traders will not be able to make money. Long-term investors may make money in good stock over a few decades, but traders have to know what to buy and when to buy. And that's where the HDFC Securities research helps you. So this is the MTF track record you have in front of you. The April, May month, these the 2 months which has passed, we have issued about 42 ideas in the MTF, where 31 were positive, and we had a success ratio of more than 74%. Average return after all the expenses was about 6.5%, and average number of trading days were 9. Similarly, for the whole of financial year, more than 244 ideas were issued with a success ratio of 76%. So here in MTF, HDFC Securities offer you the funds to invest, also gives you the idea where to trade. And if you follow these ideas with the given risk reward, these are kind of fantastic returns you can generate. So what is more important is that here, for example, in 244 ideas, 185 were positive and 59 were negative. Now, I want to, since a lot of new traders are here and they are learning about trading for the first time, I just want to refresh the basics of trading. How does trading work and where do most of the traders go wrong? The rules of trading, or the main idea behind the trading, is that you have to control your risk reward. For example, suppose if you have a risk to return ratio of 20 to 30%, 1 to 1.5, and success ratio of only 50%. So 10 trades you do, you lose 2 rupees per trade in 5 of the trades, and make 3 rupees per trade in another 5. That means you lose around 8 into 2 into 5, 10 rupees in these ideas, but you make 15 in the profitable ones. You end up generating 5% return, even if you are wrong 50% of the time. If you are better trader and if you can generate about 60% success ratio, you end up making 10% return on your capital in these 10 trading ideas. So 60% success ratio, 1 to 1.5 risk return, can generate 10% return in 10 trades. Now, given this 50 or 60% success ratio is enough to generate humongous profit, here, as I mentioned, on HDFC Securities MTF ideas, 70 to 75% kind of success ratios were there for FY24 and FY25 2 months. Even in FY23, 61% kind of success ratio was there with a 2.6% average trade. And average holding periods are about only 10 to 12. So if you control your risk towards return, be disciplined, humongous amount of money can be generated. So what is the method? How do we come to this 70% kind of success ratio? What is the magic behind our method? So first is that there are about 2,900 companies traded on the exchange, out of which, according to our risk parameters, around 700 companies are eligible. We usually take the Group 1 securities published by the exchange. We also give MTF calls on scripts which has more than 500 crore market cap. When we add a new script under MTF, about 20% is the price band, and the initial price are always about 10 rupees. The initial requirement of margin are according to the exchange. Average trading volume securities are part of the collateral list, and it is rigorously checked by our team before entering the these parameters. So first is a huge filter is applied, and only 700 kind of companies go into this. Then comes the fundamental screener, where we check about a number of factors ranging from history of the company, promoter's background, its pledge, its debt, the opportunity, cash flows, investors holding, free float, dividend. And we generally don't recommend when there are corporate result, election results. We try to avoid such days. A lot of industry related factors we check before we finalize these 300 odd stocks which are under our fundamental coverage. Based on that, we applied technicals on it. A lot of technicals, global, intermarket, seasonality analysis is done. We do analyze the institutional flows, Nifty, Bank Nifty, and other indices trend, relative strength of the sector in the stock, price and volume analysis, momentum indicators, derivatives, and breadth. We combine all these to come and bring the stock, our watch list, to something like 100 stocks which are always there on our radar. Based on that, we go and try to identify 5 to 20 stocks depending upon the market condition and momentum, and then we recommend them under the MTF. So let me give you some examples of success ratios. Like SCI, on 15th of May, around 217 we recommended, and on 23rd of May, around 255. So in a span of few days, about 19% return was generated in such ideas. Similarly, IRFC, from 14 May to 23rd May, 19% return. Kirloskar Oil Engine, from 942 to 1000, 16% return. From Campus, 246 to 283, 16% return within a span of 1 month. Hindustan. So these are the success examples. And as I pointed out, we have recommended 42 such stocks. 31 have been positive, and 73 to 74% success ratio has been achieved by our team. It doesn't mean that every stock works out. There are some volatility, and there are some 11 ideas where we have gone wrong, and that's where the risk management kicks in. If you manage the risk, for example, we gave HPCL on 10th of April at 485, then our stop loss was there at 471. Here it got triggered, we exited this trade. Though it worked out in future, and for a longer term investment it could have been a positive idea, but here we book the loss and move on to the next opportunity. For example, Oil India, we gave around 26th April at 629, and there was a stop loss triggered on 13th May. We exited here, though again example is that that stock eventually worked out, but if you are following this system, you have to follow the stop losses. So if you follow this system, and if you keep your emotions under check, if you follow the method, then what kind of results are expected? So for example, I have talked about these 42 ideas which we have generated in this month. These 42 ideas, suppose if you were a new trader and if you have started with HDFC Sky, and if you have traded all these ideas, all 42 ideas, then you would have given about 1400 in the brokerage and other charges, another 1400. You would have paid about 4100 approximately interest cost on it. And we always try to keep the number of ideas under open maximum of 220. In this case, your capital, suppose you were putting in 50,000 rupees per trade, out of, say, I'm assuming that you are starting with the 10 lakh of capital, maximum utilization in our ideas would be around 7 lakhs. So maximum 14 calls were open. Now, if you pay 12% interest on your MTF position or a BNPL position and another brokerage and other charges, still at the end of it, after paying all the charges and expenses, you would have generated about 6.5% return, about 39% return annualized on these ideas without putting in much money to risk at 6.5% absolute return. So this is the magic of MTF, where you do not bring in capital or the full capital. You bring in certain amount of mark to market capital, which helps you to navigate the volatility. If you have long term ideas, you put it on the collateral, generate margin on it, and you can generate humongous amount of alpha. Provided you understand this method, you execute it as per our recommendation, and stick to it over the years. Do not put more capital into one idea and less capital into lower idea. There are times when there is volatility, there will be stop losses, there will be losses on your trading, but as long as you manage your risk to return ratio, as long as you are disciplined, and if you keep doing it day after day, week after week, over the years, we have seen that in last 10 years, many successful traders have generated humongous alpha based on our research recommendation. So this webinar is to make you familiar with the concept of trading, concept of MTF. We are providing you the capital at a cost. We are providing you the ideas. All you need to do is to have the mental makeup to follow it with discipline. And I'm sure you will be all successful traders and you will come out on top. So that's what I wanted to cover. Shamila, if we have any questions, I'm open to answer.
Devarsh, can you just share some views on the market going forth, especially after the election results? I mean, how do you look at the markets?
Right. So now what has happened is that the earlier market went into the elections assuming that the current dispensation of NDA will come out with a majority. Now what has happened is that the BJP standalone seats are a little lesser than the market expectation, and that's why we saw one knee-jerk reaction yesterday. Now NDA will convene its own meeting. They will announce a PM candidate. Other parties will provide its support. The Prime Minister will have to go to the Rashtrapati Bhavan and claim the government, and then there will be a ceremony for the Prime Minister. Once that, there will be various allocation of the ministries, and then budget will come. So from now till budget, July, mid-July, we will have various events depending upon the various ministries, and the 100-day program will be released. Once we look at that 100-day program, we will be able to come out with different ideas. The general impression is that the earlier, which were the defense stocks and the power stocks in the PSU category, which were trading at a significantly higher market premium valuation compared to their history, will go through a correction. The sectoral shift will happen, and now we will see that the defensive areas like IT, FMCG, and pharmaceutical will start performing. As long as the investor behavior is intact, where we are seeing a lot of money comes into the domestic mutual fund via SIP of around 20,000 crore per month. Unless we see significant dent in that corpus, markets are likely to remain buoyant. Post June, we will expect that the government of India's bond will be added to global bond indices, and then there will be a lot of flows coming into the debt market side, and that will cap the interest rates. And eventually, we expect in the last quarter of this year, interest rate to come down, and that will help the financials. So financials, FMCG, IT, and pharmaceuticals are the sectors which will take a front seat. Engineering and capital expenditure related stocks and defense PSUs will take a back seat now.
Okay. Thank you, Devarsh. But do you think with yesterday's correction, it was a good opportunity to buy in the market? Do you think that is what should have happened?
Yeah, so now sectoral churn is happening. I think if you have risk appetite, if you, according to asset allocation, if you have capital to invest, I think FMCG, IT, and some of the pharmaceutical stocks are looking attractive for a shorter term period, and that's where we are going to focus now.
Okay. Omkar, are you there? Are there any questions? We can take up some questions. I mean, Devarsh is, open for questions. They can type in their questions.
Yeah, I can see one question. Sharmila, what is the interest rate cost in MTF?
For the Sky customers, for existing customers, we are at 12%. We're much better in terms of our competitors in the market, where they are offering 18%. You will have Angel, you'll have M-Stock, offering at 18%, but Sky as a platform, we're offering 12% as interest. Very competitive.
Right. Now, there is a question on how does this interest outgo happens. So does it deducted from the customer's account on a daily basis?
Here what you have is, you can either keep your cash as collateral or your stock as collateral. We would, want customers to keep their stock as collateral. So that also covers your M2M. So here, whenever there is a loss or whenever there is, there is a downside or an upside, there is a credit and debit which happens in the ledgers of the MTF ledgers. So stock collateral is a better option.
Yeah, once you have the initial margin under generated using your stock as a collateral, then you will be deducted on daily basis on the interest, especially the mark to market losses or profits which are there will be deducted, will be credited or debited to your MTF ledger on a daily basis. I think there are no further questions, Shavila, so we can wind it.
Yeah, anyone, want to have some questions, you all can just put down your questions. Omkar, you want to open in case if people want to ask?
Ma'am, as I can see here, currently there are no more questions. So we have open up for the question answers. So if any customers have question, they can ask in the chat box.
Yeah, anybody wanting to ask questions may please do so. You all can talk verbally by unmuting. Are they unmute?
So depending on the screen they are using, they'll have to, a question mark is there. To press that, there will be a window where they have to type their question and it will be appearing on the screen.
Are there any questions, Omkar? So then we can, have a
There is
closure
one more
on
question.
this.
Last question is that how to activate the MTF?
There are two things which are important. If you have a trading account, first is you need to have a DDPI active, which is the most important part of it. So once you have the DDPI active and then you get activated for MTF, that is your e-margin, which will show as e-margin into your account, and you can trade into e-margin, MTF. DDPI activation is very important. If you don't have that, you will not be able to trade into MTF.
Okay, if you have any further questions, you can always connect us through email or through our customer care. Shamila, that's it. You can close.
Yeah, thank you all for attending, and I hope this has given you insights about what do you expect in the future, and MTF as a product where we very competitive in the market, offering you the best rates in the market. So any further questions that you have on MTF, you may write into customer care at hdfcsec.com, and if you have anything, they are the people who can get you connected everywhere. You can also look out for Devarsh, who is always most of the times on TV available, giving a lot of insights about the market and what do you expect from the market. So thank you so much for attending, and all the best.
Thank you.
Thank you.